Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're realizing further selling pressure today. We're seeing them down now for a fourth consecutive session. And with today's price action, we're looking at that June future pushing down to the 126 handle. 126.01 currently in the low end of the range for today and the low end of the range for the year as well. And I think when you look at some of the factors contributing to the selling pressure today, couple things to point to. Number one, ECB announcement this morning, probably a little more hawkish than what the market had anticipated. Reining in liquidity provisions over the summer months appears to be on their docket, as well as potentially moving a little quicker and in interest rate hikes. And with that, I think that was one of the driving factors as the Treasury markets here in the United States are resetting now expectations probably as we move towards that Fed announcement next week. So I think that's one of the driving factors. Number two would be the inflation data this morning, pretty much in line with the elevated expectations. Well, it was in line with the elevated expectations, but I think that's still another contributing factor as to why we're seeing selling pressure really across all the different durations when you look at the Treasury markets today. Now the yield on the 10-year, we're looking at it's back above 200 basis points, just shy of 201 basis points currently, which is up about 5.5 basis points on the day. And the entire yield curve is shifting higher today, where we're seeing the back end of the curve selling off more so than the front end of the curve. The entire yield curve has moved higher, so even in the short end, we're still seeing selling pressure, but a little bit more pronounced on the back end, and therefore shifting that yield curve higher with the 10-year yield back over 200 basis points.